Welcome back for another top-notch video, guys. Lots to talk about this week as we review TSP for this week through the 15th through the 19th of January. So let's dive right into it. First of all, the first thing I want to talk about or address is the recent government shutdown that we've had and how that'll affect your TSP. I'm not going to go into all the details about how it affects that. There are some, and that'll get you right to the government shutdown at the TSP on their site, exactly what that means, and they have a little PDF document which I'll show you to kind of give you the down and dirty of that document. This is the document pulled up here, so it kind of shows loans and whatnot, what you can go through on that. Furlough, it has a lot of, it's just a really good questionnaire, and like I said, you can find this on TSP's website or TSP Talk. Go to one of those two places. You'll be able to make interfund transfers between your TSP. That's one of the biggest things I was kind of worried about, so just be careful about that. You might want to be careful with this the 1% agencies match. I would read into that. I'm not going to go over all that. And here on the last page here it says, can you make interfund transfers, and the answer is yes, right from their website. So just be aware of that, guys, as we're moving on. Let's get right into stocks though, and what happened this last week in regards to stocks for the TSP and our ETFs. So last week we had an allocation of 100% in the I fund, and that ended up doing pretty well. Let's talk about some of the basic features for this last week. So one of those features was we had the Dow moving around a little bit more volatility this week, and after the bell on Thursday we saw IBM and American Express selling off a bit after some disappointing earnings. One of the biggest notes for this last week is the 10-year Treasury bond has. We're going to review our life cycle funds this week and our G fund. And again, this is for defensive when stocks are not doing well. And we might want to get a little more defensive, a little more diversified now that we've had such great gains in the stock market. Of course, we're going to be reviewing our C fund, S fund, I fund, and F fund, and that they correlate to all their ETFs. So the C fund equals IVV, and that's how we track it. The S fund equals VXF, and that's how we track that. The I fund equals EFA, and the F fund equals AGG. So let's move into those stocks for this week. I'm going to zoom up in here. So as you can see, guys, since the beginning of the year for the IVV fund or the C fund, we have had significant growth. We had a really good week. So very good week. We are seeing a little bit of weakness in our other charts, so let's just look at that as we move on. So as you can see, IVV from a weekly perspective down here, this is our momentum on our weekly chart. We are still gaining momentum, but we've had a fake out here, and usually after about 2 fake outs we don't see much action after that. So as you can see, the charts have been going up significantly, but I'm just saying you might want to really start to watch this fund if you have money in this fund, to really start taking a look. You can't take a back seat anymore. Let's look at the 2-day chart, and as you can see on this 2-day chart, this is exactly what I'm talking about, guys. We have very good energy moving up from the beginning of the month, and now that we're in the mid of the month, we're seeing a little bit of weakness on our 2-day chart. So this is the next 2-day bar. We went from on our DO, we went from 408 to 407. Typically when the DO starts losing energy, we start losing our stock price. We didn't see that on Friday. Now we have, this is a 2-day chart, so this is the last 2-day bar. It's a Friday bar, meaning we'll see some action on Monday. I wouldn't be surprised if, since we had a little bit of lost energy here, we start losing a little energy here on our Monday chart. So just be aware of that, especially with the markets so high up here. There's no testing of this resistance line. There's just nothing there, and it's just something to be cautious of and keep in mind if you have your money in this fund. Let's move on to our next fund, which is the S fund, or the Dow Jones, and we track that through VXF. Sorry, losing my mind. So with our VXF fund today, guys, let's take a look at that. This is a little more healthy. So as you can see, with our VXF or S fund, the Dow Jones, we have multiple tests of this resistance line, and we are staying above that resistance line. That's a very good very good. You can't go below that, which is good. It's gonna well, probability says it's not going to blow. Markets can do anything they want, but the probability says it's probably going to end up staying above that line, and I just would rather have my funds in this fund versus this fund where there's just so much room for that to go. I mean, you could see a drop all the way back to this resistance line. Probability based off of losing energy says that we could possibly see that. The probability is creeping up every time that line drops down on IVV more so. We're still going to have to wait for weekly support. So once we see some weekly support, maybe this next week it'll drop down, but we haven't seen that yet, so we're waiting on that. Let's go back to the S fund. So like I said, I think this is pretty healthy. You see a lot of really good things happening. Since 2018, this fund has taken off as well. It's done very, very well. Looking at it from a chart perspective, VXF has continued to rise on the weekly charts. So every week in January we've seen positive energy. The stocks have seen positive energy up here. Our DO has increased from 2.59 to 3.48 to 4.25. On a 2-day chart, though, we are starting to see quite a bit of lost resistance, as with the S&P 500 or IVV or the I fund, or I'm sorry, the S fund. The Dow Jones typically tends to do the same thing. It's a smaller basket of stocks, so just be aware. We have one 2-day chart here, another 2-day chart, and we're waiting on this 2-day chart to close. Charts have not been really following the energy. We did have one down day, but not much. On Friday, we just had an explosion, almost of a whole percent up. So just keep this in mind, guys. If you have money in this fund, I would not be sitting back anymore. I would be checking. I would be I would just monitor your account balances for this week. I'm starting to see a little bit of alarming things since the start of this rally, since the beginning of January and the last part of December. So just be aware of that. But let's continue to move on into our other funds, since this is just supposed to be a short video. So our international markets, EFA or the I fund. Okay, let's see what we have going on there. Obviously, another beautiful chart here, guys. Look at this, all this price action, but like the S&P 500, I just don't have any resistance lines to support this yet. They might end up putting a resistance line in here just because it's such a high. It's just such a high trend. This is just incredible what we've had for action this month. But just be aware, it could come back all the way down to 72. I mean, there is the probability of that happening. Like I said, another beautiful week here for performance. Let's look at it in the charts. EFA for the weekly chart. Let's look at that first. As you can see, 3 beautiful weeks of gains for the EFA chart or the I fund. Excellent. I am a little concerned that this chart is so far out of the Bollinger Bands. I said that last week, and here again this week we have almost half the bar outside our Bollinger Bands. So let's take a look at the 2-day chart and the 2-day energy in regards to EFA or our I fund. As you can see, we had that beautiful rise in January. Look at that energy just continue to rise up. Multiple folks poking their head out of the Bollinger Bands, but no red bars, guys. We're starting to move back into the EFA Bollinger Bands, which is very healthy, but we are starting to lose energy here. Now our blue line is way above our red line, so that's a positive sign here. But our DO has gone from 950 to 944 to this week. Now this bar isn't closed yet, but 902. Now this bar could close higher or lower depending on Monday's charts, but I took the warning bells here off of this chart. I mean, you want to catch stocks as soon as you can. So based off because it is just so high up with no resistance line, and our 2-day chart is starting to drop, I decided that we should probably reallocate our funds just a little bit this week. So let's move on and just look at bonds, and then we will look at our allocation funds. So bonds, or our F fund, AGG ETF. Let's look at that. Now, I consistently have said it's not a good fund to have your money in. Bonds is just not the place to have it last year or this year, really. And I never said it was ever going to get back to that 109.50 line, and it continues. It never did make it back to that 950 line. In fact, it continued to go lower, and in fact, it went way below this resistance line here, guys. We are just going, this fund is just going downhill fast. I would not have your money in bonds. It's just not the place where you want to have your money at this point in time. It's just continuing to lose money, and I just don't see it hitting this. We could see it come back, but I just wouldn't have. It's just not a wise place to keep your funds in the or your brokerage account or your IRA. Let's look at it in the charts. Chart-wise, we are seeing a massive down energy bar for the weekly, and stocks just took a tank. We went down from 109 to we almost lost 50 cents on this price, on the share prices here. Not doing well at all. Look on the 2-day chart. We have this beautiful negative energy line. Not a time to be investing in AGG. We could see a little bit of difference. This bar has not closed yet, but as of right now, it would have to make up a lot of money to bring that stock back, or that energy back. I would not have your funds in AGG or the F fund at this point in time. Okay, so now that we've looked at those, let's go into what we should be doing for the week. Now, I said that the G fund or the life cycle funds are really for defensive, or when stocks are not doing well. Stocks are doing great, but I just want to diversify our funds a little bit. And by diversifying those funds, we can, if we do end up with a large loss from either the S&P 500, like this big gap here, or our I fund, which I'll pull that up, this big gap here, we could have our funds a little bit allocated for like VXF, which shows a lot less of a drop if we were going to have a drop in stock. So I'm starting to take a little bit of precaution with our stocks. I think that's something that we should do. Now, typically you don't want to be looking at your stock portfolio too closely, because you could be making trading mistakes by trading too often. I fully acknowledge that, but I would prefer not to lose the gains that we've gained. In a typical year, 8 to 10% is average of what you'll make in a year. We've made 4% already this year. I mean, it's been nuts. It's been just crazy. I mean, these percentages are just off the wall for this month. If you look at this 5%, 4%, 4%, almost 5%, just for this month alone, that's half of what you should get in a year. I would like to really keep those funds or those gains of what we had. So, what I'm allocating for this week is we're going to take some of that money out of the I fund. We're going to move it over to the L2030 fund. What this is going to do for us is it's going to diversify our funds a little bit, and it's going to put a little bit of our money in the G fund just so we can safeguard that capital. So I have put together a screenshot of what the L30 fund looks like. So let's pull that up. So this is right off the TSP website, and this is a life cycle fund. And what this is doing is this is just preserving some of our capital. So what we're doing is we're putting 32% of our money from our TSP into the G fund, which most people don't have access to unless you have a TSP. We're going to leave a little bit in bonds. I'm not really wanting to put anything in bonds, because anything we put in bonds we're going to lose money on. So this is going to be losing money. But overall, we're still keeping quite a large percentage of our portfolio. Almost, I would say 50%, over 50% of our portfolio is still in stock. So we're just diversifying between the C fund, the S fund, and the I fund. But we're diversifying between, instead of putting 100% in the I fund, we're putting 33% in the C fund, 18% in the I fund, and not 10% in the S fund, with 30% in the G fund. Can't really lose money in the G fund, which is great, but we are going to be keeping almost about, I would say, a little more than half our portfolio instead of 100% of our portfolio in stocks. And that's to safeguard some of those gains we got off the beginning of January, just because they were so great. Now, if we see a change in the charts, we get more positive energy off our 2-day chart, and our weekly continues to rise, we might change this back to the I or S or C fund. But for now, I think this is a very safe move for funds this week. If you guys have questions, concerns, or comments, go ahead and write them in below. Really appreciate you guys subscribe to the channel. This is a channel that monitors the TSP account or ETFs. You don't even have to have a TSP. You could just have these ETFs in your IRA or brokerage account and make money, or your 401k, and make money watching this channel as well. We try to monitor the TSP closely and try to make the best decisions every week. Once again, if you have questions or concerns, you can write them in the comments below. Really appreciate you guys tuning in, and we'll see you guys next week. keep in mind that for this government shutdown too, that it's probably, I want to mention that. One note, with the government shutdown, it's probably good to preserve some of that capital, as well as why we moved it into that 2030 fund, just to preserve capital just a little bit why the government is shut down. Now, if the government reopens and we get more action out of our 2-day charts, we'll probably move that back into our IS or C fund. But this is just a really good place to preserve a little bit of capital and keep half our money still in the markets. We'll see you guys next week. Sorry for the little added bonus there. This has been another top-notch video.